Welcome to Beat the Market. I'm Antonio, content creator. Today, we're going to do some technical analysis on Bitcoin. Stay tuned. Okay, what I'm looking at here is a weekly chart of Bitcoin. The last few days, Bitcoin has been, well, the last few, yeah, it's the last few days because this is a weekly chart. Bitcoin's been moving pretty choppy. As you can see, we do have a green candle here, which shows that the bulls are technically winning, but looking at this long wick, showing a lot of selling pressure. Okay, so Bitcoin is not going full bull just yet. All right, but I believe a bottom is very near. There's just a couple of scenarios that we need to look out for, which I'm going to go over right now. Okay, so what we have here on the weekly chart is a 5-wave bullish move to the upside. Okay, make it a little smaller. Over here was choppy, up, down. It wasn't moving much. It was just moving sideways around the 6,000 to, what is this, 11, 12,000 range. It didn't really move much up until starting here. And then here, that's when the move started happening. Because in a bull trend, you want a high, a low, higher high, higher low, higher high. So that's my 5-wave on Bitcoin right there. So you got 1, 2, 3, 4, 5. After the 5-wave move, what comes next? The correction, the ABC correction. If you guys watch my previous videos, I go through how this is an ABC correction and how this is 535. Okay, so is the C wave over? Are we going to start a new 5-wave move up to the upside? Well, possibly, and I believe soon, but we have some scenarios that we have to look out for. Now, if we look at this Elliott wave pattern, this is one of the rules. An ABC correction wave will usually target the 61.8 retracement of the trend move. What it's talking about is Fibonacci retracement. Okay, so let me make this smaller again. Here's my Fibonacci retracement. So what we want to do is we want to start at where the trend began, which is where I add this red line here. And you want to bring it all the way up to where the trend ended, where the 5th wave ended, which is up here. Okay. So it said it will retrace back to the 61.8 retracement. So in this A, B, C, we got very close to the 61.8 retracement. Okay, so that price target would be around 27,000. So if we still have more downside, there's still one day left in this week. So, today is Saturday. So Monday, Sunday will be another day. Another candle should start. And we may have more downside, guys. But don't panic. Don't go crazy thinking it's going to be over. This is where we use technical analysis to help keep us objective. And we want to watch out for the scenario. Now, what are these scenarios I keep talking about? Well, so the first scenario we want to watch out for is if it continues to keep going down, we want to see a bounce off of 27,000, 27K. Right? That would be where the 61.8 retracement will end. Okay, we still have more downside, of course, more support levels around 16K. But if it does break below 27K, then that would pretty much ruin or break the rules of the Elliott Wave ABC correction. And it could be something more deeper going on, a more deeper correction, But if it does go down and it bounces up to 27,000 mark, which is where I would look to enter, then we know this is textbook Elliott Wave correction and we good. Once it bottom out, we get some more volume going, probably maybe some good news from the whales, because those news, they do bring up the volume. We'll get some, and then we'll stop. Maybe we'll start that next 5-wave correction. So that's what we want to look to enter around 27K. Cut your loss if it drops below, because it would break the rules of the Elliott wave. So, we want to manage our risk properly. All right. So the other scenario that we want to look out for is there is a possible chance as well that we did hit a bottom on the C wave around 29K, because these rules sometimes you gotta be a little bit flexible, because you can't fully predict anything. Nothing's 100%, so you gotta be a little bit flexible and open-minded. So I always say, if it's trading below the 20-day moving average, it's in a bear trend. To me, the 20-day moving average is an equilibrium. That's the yellow line. So if it breaks back above it, which is around 42K, then that's, to me, a sign that bullish strength is picking up. We're building bullish momentum. And we'll probably test the previous high back around 60K, or the previous low around the 48K, 47K. So those are the scenarios I'm watching for. So if we break 42K, there's a chance we'll go to 47K, break that, go to 52, and then the 60. And if we break 60K, then we are going, I'm pretty confident we will break all-time highs again. But just be open-minded, be flexible. Okay, so if it breaks the 42K, all right, we in a bull trend with bull momentum is building. If it keeps going down like it is, I have support here. It keeps going down. Just watch for the bounce around 27K according to the Fibonacci retracement. All right. So just a quick short video. I hope that was able to help you. Be safe out there. Good luck, and I'll see y'all next time.